When we started this particular series, there were 50 days left. Now the days are continuously decreasing, so it means we have to be more cautious about our preparation. Like, we have a very less time period to prepare, and we have 4 subjects, or each and every subject have 4 modules, so we have to be very much prepared for all of these. So now let's start the session. But before starting the session, I'm your mentor Amanjot Kaur for Indian Economy and Indian Financial System and BPP, and these sessions are going on Monday to Friday in morning 7 a.m. for PPB and 7:30 a.m. for Indian Economy and Indian Financial System. So do join these sessions only on offices that are 24/7. Now let's start the session. And as you know, in each and every session, I come up with a particular topic of yours, and in that topic, I will discuss the certain number of questions with the explanation of the topic. So what topic we are going to discuss today? We are going to discuss the chapter number 14 today, and simply we know that Indian Economy, Indian Financial System have the 4 modules. Out of that, first module covers only 11 units. Total we have a 45 units. Out of that, the first unit only covers your 11 units that we have completed. 12th and 13th unit we have already completed, and today we are going to discuss the 14th unit, that is money supply inflation. So before coming up to the questions, practicing questions, let's start and understand the topic, and then we will move forward to the questions. So first of all, what is money supply? So for money supply, RBI is the central bank of our country, and RBI need a certain, what we can call it, RBI need a, okay. So RBI is the central bank of our economy, RBI is the central bank of our country, and RBI needs to measure the liquidity in the market. RBI needs what? To measure the liquidity in the market. So RBI have to measure the money supply. RBI have to measure the money supply in the economy. And when RBI measure this money supply in the economy, this will be done by RBI with M1, M2, M3, M4 and M0. Out of that, M1 is known as narrow money, M3 is known as broad money. They are very famous, they are broad money and narrow money, and they are very famous. In context, maximum number of questions will be asked from these two. Now it's very obvious, like RBI is the central bank of our country. It's the responsibility of the RBI to manage the liquidity in the market. Liquidity means the cash flow in the market. And how RBI will be managing this cash flow? With the help of monetary policy. So we know that RBI makes monetary policy. RBI makes what? RBI makes the monetary policy. So this is the responsibility of RBI to manage the money supply. Let's say in the economy, the money supply is increasing. If the money supply increases, the demand of goods and services by the consumer increase. If we have more money, we will purchase more goods and services. If the demand increases, the supply will decrease, because the demand and supply will always have an inverse relationship. They always have an inverse relationship. So if the demand is increasing, supply will definitely be decreased. Okay. Now after that, the prices will start increasing, and the money value of goods and services will be decreasing. And that creates inflation in the country. That creates what? That creates inflation in the country. Okay. Now, if money supply is reducing, then people will demand less goods and services, and then the supply will be more in comparison to demand, and then the prices will reduce, money value will increase, and this will create deflation in the economy. So you can see, if the money supply is more than required, then it creates inflation in the country. If money supply is less than which is required, it will create deflation in the country. So to make economy capable of being stable, we have to stable the money supply. And to stable the money supply, RBI makes monetary policy. RBI makes monetary policy, and the objective of monetary policy is what? To have a price stability. To maintain price stability is one of the objective of monetary policy in our country. That's what RBI is doing. But to maintain the price stability in the country, RBI have to know like how much money is there in the economy. And how RBI will know how much money is there in the economy? With the help of these measures of money. So with the help of M1, M2, M3, M4, M0, RBI will know what amount of money is available in the economy. Accordingly, RBI will make the monetary policy to maintain the price stability in the country. So they all are related to each other. Now, what is inflation? This is what we have discussed about the condition measures of money, and what is What is the reason behind which RBI have to maintain this measures of money, right? Now let's talk about a little bit about inflation. So what actually the inflation is? Inflation, if I am talking about, let's take a question here, like what is inflation? This is the question for all of you. What is inflation? Okay. Now I have first option, increase in money supply is inflation. I have second option, increase in demand is inflation. I have third option, increase in prices is inflation. I have fourth option, that is reduce in the money value is inflation. And I have fifth option, that is all of the above. So which of the following option you will give that this is the right answer for this question? What is inflation question is asking, and these are the option in front of you. So let me know which of the following according to you is correct about the inflation. So can I say that inflation is simply rise in the money value of goods and services? Can I say inflation is the increase in the money supply? Inflation is the increase in the demand? Can we say that? Let's understand this. So if I talk about our country, I have never heard this statement from any person that Mr. Ambani have more income now, that's why there is inflation in the country. I never heard someone saying that the demand of crude oil from the India is increased, that's why we have an inflation. I always heard people talking about like the petrol we used to purchase at 70 rupees per liter, now the petrol is 140 rupees per liter. It means the price has been just doubled. So I always heard people talk about in context of the price, and that's what the inflation is. So whenever the prices of goods and services are rising, that will create your inflation. So the right answer is prices increase. Increase in the prices of goods and services is what? It's an inflation. Okay. Now, what happened? What happened if we're talking about inflation here? So what happens here? First of all, let's see. What conditions are there? So economic conditions will be like whenever we talk about the increase in the prices of goods and services, the first of all money supply will increase. So whenever the money supply increases, what happens? Whenever the money supply increases, the demand of consumer will increase. Whenever the demand of consumer increases, the supply will decrease because the demand and supply have an inverse relation, negative relation or opposite relation. So demand increases, supply will decrease, so prices will start increasing because people are asking for more goods and you do not have a goods. So prices will what? Increase. In that situation, the purchasing power of money will be decreased. Purchasing power of money, or you can call it a money value also. The money value will decrease. Why money value is decreasing? The reason behind is because the prices are increasing. Let's say I used to have 200 rupees. I used to purchase 2 products in 200 rupees. This 2 pen I used to purchase in 200 rupees. Now what happened? The prices increase. Now this 1 pen will be available in the market for 200 rupees. So I used to purchase 2 commodity. Now I am purchasing 1. It means the 200 rupee note which I have now, it has a less capacity to purchase goods and services comparatively that I used to have. It means the purchasing value of 200 rupee note has been decreased. The reason behind, because the prices increases. So whenever there is an inflation, the money value of the currency will definitely be decreased. Okay, so all these terms are related to inflation, but they are not inflation. Inflation means rise in the prices of goods and services. Why prices are rising? Because there is a more demand. Why there is more demand? Because people have more money supply. And after increasing prices, what impact will be seen? The money value will be decreased. So this is what we are talking about inflation. Okay, so I hope till now everything is clear to all of you. Now we will be starting practicing the question, and in the end of the session I will be asking you all that how many answers you have given correct here. Okay, so do count how many answers you are giving correct. So first question here is that which of the following is statement true about inflation? The statement which is true about inflation, and we have these 4 options in front of you. That is, first thing, a rise in the general level of prices leads to fall in the purchasing power. Both A and B, none of the above. So what do you think, which of the following is correct? First is prices are rising. Second is purchasing power leads to decrease. Third is both A and B. Fourth is none of the above. What do you think, which of the following is correct? So right answer will be both A and B, because it's very obvious the general level of prices will increase due to the inflation. It leads to fall in purchasing power. Is it true? Yes, it's true. Why it's true? Inflation leads to a decrease in the purchasing power of people as well as money. Because let's say money supply increased, the demand increased, but the supply decreased, because of which the prices are keep rising. This is what inflation is. When the prices are rising, it means the cost of living will also rise. Cost of living simply means the money you have to spend to survive. That's the cost of living. It will increase. And when the cost of living increases, you somehow have to decrease your spending, and that will promote the lead to fall in the purchasing power. And similarly, the money value reduces because the money will be able to purchase less goods and services comparatively earlier. So the purchasing power of people and the purchasing power of money both will decrease. So right answer will be C option, sorry. Okay, right answer is C. Second question we are talking about here, the demand deposit of banks are included in. So if we talk about bank have a certain assets. Every business have assets and every business have liabilities, right? So if I talk about the asset of a bank, the asset of a bank is the loans and advances which bank provide to its customers. Okay, and what is liability? Liability means simply public deposit. Liability means public deposit, that's the liability. Okay, and these deposit are of two types. That is demand deposit, the type of deposit which will be dependent on the customer demand, and the second one is the time and term deposit. So the demand deposit covers CASA, current account, savings account. Time deposit covers RAFA, recurring account, and fixed account. So demand deposits are those deposits which can be deposited as per the demand of the customer, withdrawal as per the demand of the customer. Time deposit or term deposit are, on the other hand, the types of deposit which will be there for a particular period of time. Okay, so now this is what the deposit we are talking about, and this is what the demand deposit is. Demand deposit means CASA, and the question is asking which of the following includes the demand deposit. So we have options M1, M2, M3. And to answer such kind of question, you should know what is M1, what is M2, and what is M3. Okay, so here let's understand this. If I am talking about M1, M1 is equals to currency unit plus demand deposit plus deposit with RBI. This is what your M1 is. M2 we have M1 plus post office savings. PO savings means post office savings. M3 we have M1 plus time deposit. I will explain all these, don't worry about it. And the M4 we have M3 plus post office savings, but excluding national savings certificate, right? So what is M1? M1 is saying CU plus GD plus deposit with RBI. Currency unit, CU means currency unit means whatever notes and coins public have. DD means demand deposit, whatever CASA public bank accounts have. Then we have deposit with RBI, where whatever reserves or deposit RBI maintains. This is the M1. M2 means M1 will be there, CU plus DD plus deposit with RBI will be there, plus you will have a post office savings. In the post office you have FD, you have RD, you have MIS, etc. All these will be covered. Then M3 will be M1 plus term deposit. Term deposit means your RAFA. M4 will be M3 plus your post office saving, but the national saving certificate amount you have to be excluded. So here the question was asking which of the following includes the demand deposit. So M1 includes demand deposit, M2 includes demand deposit, M3 includes demand deposit, and M4 includes demand deposit. Because in M2 we have M1 have demand deposit, in M2 we have M1, in M3 we have M1, in M4 we have M3. So all these measures of money will include the demand deposits of the bank. It means the right answer here will be all. M1, M2, M3 all will be having the demand deposit. So the right answer will be your D option. Okay. Next question. Under money supply concept, the term broad money include which of the following? So broad money, I have told you which of the following is broad money. M3 is a broad money, and I have told you the formula of broad money. So let me know which of the following will be the right. Which of the following statement will be right? Let me know that. A, B, C or D? Okay. So if I talk about this particular question, the question is talking about what is M3. And you can see M3 will include the term deposit. The first one have deposit and public deposit. It do not include term deposit. Then we have currency with public demand deposit, other deposit with RBI. It also do not have term deposit. Fourth one is saying currency with public plus bank deposit plus post office deposit, but it do not include time deposit. Here is the time deposit with bank, the demand deposit of a bank and the currency with public. So right answer will be your C option. Okay, right answer will be C option, which will cover the time deposit. It means RAFA will be covered under the M3 and broad money means M3 only. Okay, next, the most important money supply indicator monitored by RBI is dash. So we have measures of money M1, M2, M3, M4. So out of these four, which of the following is the important money supply indicator for the Reserve Bank of India that RBI calculates? Let me know which of the following is true. A, B, C or D. So I think it is very easy to answer. RBI measures this money supply because of the reason, Hana, because of the reason RBI wants to know how much money is there in the economy. Hana, RBI wants to know how much money is in the economy. That's why RBI is calculating this. Right. And RBI will want to know how much money supply in the economy, and the money supply in the economy that will be defining every liquidity to the RBI. That's a broad money. So right answer is C, because it will cover deposit with, it will cover currency unit, the money with public, it will cover demand deposit, the money with commercial banks and all with the in the CASA, then the term deposit, then the deposit with RBI. Every type of money which is available in the economy will be calculated by the M3, and that's why it is the important money supply indicator that RBI calculates. So right answer will be your C. Next question. Demand deposit with a bank include all liabilities which are payable on demand, and they include dash. The demand deposit is what? With a bank include all the liabilities. It do what? It include all the liabilities which are payable on the demand. So they will include what? Options are these. Out of that, let me know which will be included here. So demand deposit with a bank include all the types of liability which are payable on demand. It will include. So demand deposit itself represents that the deposit you have given to the money that will be run on as per your demand. If you want to withdraw it, you will withdraw it. If you want to maintain it, you can maintain it. There is no such kind of restriction. Okay. Now, which of the following is right? The current deposit, demand deposit portion of savings account, this is correct. Margins held against letter of credit and guarantee will be covered. The balance in overdue fixed deposit, cash certificate, cumulative recurring deposits, all these will be covered under the demand deposit with the bank liability we are talking about. So all answer will be your D option. 1, 2, 3, all the statement were true. Next. Which of the following measures of controlling inflation? One second. Which of the following controlling measures of inflation can be taken by Reserve Bank of India and not by government? So we know inflation is a rise in the prices of goods and services, and that can harm the economy. If the prices are increasing above a certain level, it will create a loss for the economy. So inflation is good for the economy, but a limited inflation is good for the economy. So that's why if inflation is rising, this is the responsibility of the RBI to control that. So that's what we're talking about. RBI have a certain measure that is known as a monetary measure which controls the inflation. Government of India takes the fiscal measures to control the inflation. Similarly, we have foreign trade measures. It helps in the controlling the inflation. Apart from that, we have other measures in which production will be controlled so that inflation will be controlled. So out of these, you have to tell which of the following the controlling method used by RBI. Which of the following controlling method should be used by RBI? Okay. So the right answer here will be, first is saying introduction of progressive, one second. Introduction of progressive tax system. This is in the hands of the government of India, not RBI. Control over public expenditure, again done by the government. Then profits of the public sector is in the hands of the government. So these three measures will be taken by the government of India in the fiscal policy, but the rationing of credit will be done by Reserve Bank of India, in which RBI tells in which particular sector how much loan you can provide or how much loan you cannot provide. What down payment you have to take, what down payment you are allowed to take in case of what type of loan, also how many installments you can make in a case of loan. All this will be done by RBI, that is known as your rationing of credit. So right answer will be C option. This is the measure that RBI takes. Which of the following below indexes associate with the given statement? Like, it is an index that tracks the change in the retail prices of essential goods and services consumed by the households. So whatever goods and services we are consuming, that prices will be calculated on the retail level. And which of the following index calculates that? This is the question. Is it a CPI, is it a WPI, is it a PPI, is it a CPI for agriculture? So it can't be WPI because it measures the inflation in the wholesale market. It can't be producer price index because it takes the inflation at the production stage. Okay, so we have two options, consumer price index and here the CPI also. So this is what we know, that WPI measures the inflation at the wholesale level and CPI measures the inflation at the retail level, that we know, right? So in this situation, A and D can be right. Out of these two can be right. Now we are talking about essential goods and services consumed by the household. Here you are talking about CPI for agriculture labor. So right answer will be what? It will be B. Sorry, not B, this A, consumer price index. Okay, so CPI measures the inflation at the retail level and CPI also maintain the record of what? It also maintains the record related to your retail level plus the cost of living of the public. So right answer is A. Next, if the public finds ways of making the same amount of money perform a larger amount of transaction than before, then dash. So what you're talking about, if the public finds ways of making the same amount of money perform a larger amount of transaction. Let's say I used to purchase 200, I used to give 200 rupees and used to purchase 2 pen. Now I am giving 200 rupee, but I am purchasing 4 pen. It means the same amount of money which I have, it performing the larger amount of transaction. Okay, it is performing the larger amount of transaction. This is what the question is asking about. This situation be known as what? And these are the options in front of her. Which of the following will be right? The demand for money must have risen. Velocity of money have risen. Incomes and prices must have risen. The supply of money must have risen. So which of the following is right? Which of the following is right? So it's very obvious the demand for money have not risen. The income and prices must have not risen. The supply of money must not have risen. The velocity of money have been risen. It means that the purchasing power of money increased. That's why in the 200 rupee you are able to purchase 4 products. So when the money supply, money value of the currency increases, that's the velocity must have risen of the money. So right answer will be your B option. Right is B option. Okay, because you are paying the same amount of money, but it is performing a greater transaction. Now, narrow money consists of, narrow money means M1. So, these are the options in front of you. Out of this, M1 includes CU plus GD plus deposit with RBI, and you can see currency with public is CU plus the demand deposit plus the deposit with RBI. So, this is your right answer. M1 will be your A option. Okay. Now, money supply refers to. So, a lot of time we talk about the money supply. We have just talked about these M1, M2, M3 are the measures of money supply. So, what money supply actually means? It's a liquidity that is available in the economy. But how to define this? First option is saying the amount of money in banks. Second is saying the amount of money with the public, the amount of money in circulation in an economy. So which of the following will be right answer? Obviously C. Whatever money will be available in the economy, whatever liquidity will be available in the economy, that is known as your money supply. So right answer is C option. Clear? So this is how we have discussed your chapter number 14, but this is not sufficient because the syllabus is vast. You have to cover the syllabus in the detailed manner. So how to enroll, how to know about that? First of all, you have to go to the Mahapack 2.0 to cover the complete detailed syllabus. And right now, the best option is available for you because the Mahapack validity has been enhanced according to your availability. So to enroll, just go to the Adda 24/7 application. But before that, let me know in the comment section how many answers you have given correct. Okay. And then go to the JAIIB CIB section here. Go to the JAIIB October 2023. You will find all the batches here. So when you find all the batches here, this is the Sankalp JAIIB 4th batch and this is the Mahapack. So click on the batch whatever you want to enroll. Do check the offerings. You can see the offerings are defined here only. These are the offerings in front of you. So do check the offerings and do decide the validity you want. You want a 3-month validity, you want a 6-month validity, or you want a 1-year validity. That's up to you. Okay, so this is the new thing. The 3-month validity for October batch, this is the new thing that we have introduced. After checking the offering and the validity, just click on the buy now option. When you click on the buy now option, you have to enter a code that is AUG77, and after applying this, you will get 77% discount. If you want 1% additional discount, then use the coins which are available on the application and you will get 1% additional discount. That is a 78% discount. And if you find any kind of issue at the time of enrollment, what you can do, simply call on this number. The number has been given to all of you. You can call in on this number and ask your query. Okay. Now, apart from that, if you are watching the session recorded again, then do let me know in the comment section how many questions you have answered correct. Always, after completing each and every recording, do let me know how many answers you have given correct. And also do not forget to download the application because here you find the quizzes, the live batches, everything. Apart from that, do not forget to subscribe the channel Offices Adda 24/7 because here you will find all the videos, conceptual practice, everything will be available. So on last Sunday, I have taken 50 questions in 50 minutes for your whole syllabus of IE IFS. So to get that, to check that particular video, go to the playlist and check that particular video because that is important. Do not miss any session. Every session is very important for all of you. Okay. So see you tomorrow at the same time, 7:30 AM only on Offices Adda 24/7. One more request from all of you. Do not forget to share the session on Telegram channel, WhatsApp group or Facebook, wherever you know the bankers are there who are preparing for the JAIIB October. Okay. So thank you all for joining the session and have a great day everyone. Take care.